and welcome to Property Question Time with me, your host, Heather Kingston. I'm a realtor with the Kate's Group, and I'm excited to have our panel of experts before me today. This is the show where you get to ask your property-related questions to our panel of experts. Let's see who's joining us in the house today.
Kate Hogan with Keller Williams Heritage West.
I'm Gary Pierce with Pure Funding Mortgage.
I'm Sabrina Sparkman with Coldwell Banker Realty.
Welcome, guys. I'm glad that you joined me today. We've got lots of questions before us. Are you ready to get started?
Yeah, excited.
Excited.
All right, Sabrina, we're going to talk about foundations first. I think that, especially with older homes versus newer homes, there's a bunch of different types of foundations. Let's talk about the types of foundations, and then Gary, if you could weigh in on how they affect funding sometimes for your loans.
Okay, well, where I live and work, I see all different types of foundations. The primary ones are slab, pier and beam, and then we even see manufactured homes on blocks and retrofitting of manufactured homes. But the slab is most popular, I think most common, and that can be either rebar or it can be tension slabs. But that's just where you have the concrete, and it fills the exterior of the house, the foundation. So it's concreted on the entire exterior of the home for the foundation. And then the pier and beam is where you have these sonitude kind of cylinder things that put beams around the base of the house, but then put the piers, the concrete piers around the house, but then the beams sit on top of those, and the house sits on top of that pier and beam. And a lot of times fixing a foundation can be easier on a pier and beam home than a slab, because you can get underneath it and get plumbing done and things like that. So people are a little hesitant about pier and beam homes, but really they're easier to fix on the backside than slab. And then manufactured homes are kind of a whole different animal, and I know a lot of the lenders don't even really like to deal with some of those. You got to find a specific lender for the blocks. And so those are the three types that I see mainly, and they all have their pros and cons.
Yeah, as far as you mentioned, the lending side, you have some tricky situations with the manufactured homes, especially as you mentioned. A lot of lenders won't even touch those loans, so you do have to do a alternate type financing, but they're still loans that you can get done. But yeah, it can be a little bit tricky. And then kind of going into more of a conventional, like a slab, where you might have an appraisal done, where you need some updates to the you have a structural engineer come out and do that. So that can affect the financing. Typically, it just needs to be addressed to get the financing done.
So if the appraiser sees cracks or some indication of some movement, they could request a structural engineer to come in?
Yeah, and they can, from an FHA or VA standpoint, a USDA would require it to be completed. The work would have to be completed before funding.
Right.
Yeah.
Right. Perfect. Okay, Gary. Question number 2. All right. So we have lots of lakes and rivers around here. Are lakeside or riverfront properties more difficult to finance or insure than non-waterfront properties?
Right. So there's a couple different ways that properties are held in title. One is fee simple, and then the other is a leasehold. And so that's really the only two different. The leaseholds can be a little bit trickier depending on the lender. A lot of lenders have what they call overlays, where they won't do a leasehold, and so you would have to find a lender to take care of that. And that means where an entity actually owns the ground that the house sits on at the lake, versus where you buy a home and you actually own that ground. So it's kind of what it says. It's a lease. You're leasing it from an entity. So those are the two kind of things you got to look at from where the property's held.
And usually those leases are 20 or 30 years and owned by the city, is that right?
The city, and I've seen it in different states where it's they're held by the actual power companies, because there's so like in the Carolinas, for instance, you have lake systems that generate the power. In Tennessee, you have TVA, and so those organizations actually hold the leases.
Oh, yeah, that makes sense.
But at the lake where I live at, in Possum Kingdom Lake, they changed that this year, where the BRA used to have those leaseholds, but they sold it to a private party. And so now everything changed around the 2016 timeframe. But the properties at the lake that are still leasehold are actually owned by the people that own the land,
Right.
and they lease it back. The houses or the little cottages or whatever, they lease it back, but those leases are generally year to year. And a lender around the lake that's used to lending on those leasehold properties now I think won't lend it if it's not a 5-year lease or more.
Right. Yeah.
They won't just do a year to year and finance the improvement that's on that leasehold land.
Yeah.
But it's
A lot more
interesting
risk
how
for
it's
that
changed.
lender, yeah.
Right.
All right, well, thanks, guys. Kate, when we get a property under contract and the title work comes back, one of the portions of the title work talks about deed restrictions, not related to HOAs, but just the ones that are written into the warranty deed on the land. What are the common ones that you've seen? Do they expire? How do they work? Have you ever run into a situation where the deal couldn't go through because of those deed restrictions?
Yeah, so it's something that you find, there's some that are pretty broad across. If there's land, there's going to be deed restrictions tied to that land if it's just raw land, and that's going to be, minimum square footage, housing type, property, a lot of manufactured restrictions, that they want a single family residence and no mobile homes. You'll see differences like barn dominiums. So that's something that you find, if that's your client's true intention for why they're purchasing the property, that's something that we need to make sure that, that we're actively looking through the deed restrictions. A lot of times we like to work that beforehand to make sure that we're not getting through that whole process and then we find out. And so, yeah, you'll find animal restrictions, camels, swine, that kind of stuff, pretty common. And then there's deed restrictions for, how many head per acre, that kind of stuff. You'll see different, some examples, privacy fence, that's a part of the deed restrictions, that you can't have full privacy fence, or adding a mother-in-law suite or a shop or stuff like that. And so, yeah, when that portion of the title work comes back, that's our job as an agent, is to be proactive to make sure that our client's true intention of the property isn't obstructed by anything that comes back in the deed restrictions. You can file for kind of a variance on them too if you're looking for I know some builders will grant permission, but that is something that you can see some waivers on it. They don't necessarily fall off because it's filed of record with the deed. So you'll see a wide variety of them, but most common is square footage and property type.
Thanks, Kate. And Sabrina, you recently wrote some deed restrictions for some land that you own. Do you want to talk about that a little bit in that process?
Yes, we did, and all those things Kate mentioned were great. I had an experience with commercial property to where we owned some commercial land up at the lake, and we subdivided it. And so when we ended up selling a couple pieces of that land, we wanted to make sure, since we have a real estate office there, that the people that we sold the land to beside us and behind us did not open up another real estate business. So we, so we wrote
what
it.
you did there.
So we wrote it into the deed that for a number of years, I think it was 10 or 15, that they could use it for almost anything, but they could not open up a competing real estate business, because we figured in 10 or 15 years we'd either be retired or wouldn't care, or didn't matter or something. But we did make sure to do that. So for commercial purposes, sometimes when you sell land, you want to write into the deed restrictions if limiting a competing business. And
very good.
Yes.
Right, perfect. Okay, thank you. All right, so for the group, let's talk about water wells a little bit. A lot of our areas are in groundwater conservation districts, and that comes with a certain set of rules for our water wells. How far should a well be located from the residential property and from septic tanks, and what about boundary lines on the property? Who wants to take this first?
I'm going to leave it to the experts.
Yeah, well, thank you. Well, boundary lines, that's just as simple for anything that you're going to have on the property. There's going to be setbacks, there's going to be easements, there's going to be all of that. And so being very aware of your survey and what lines there are that, build lines, etc. I always say refer to the county, go to Weatherford Permitting or specifically, because they're going to have their guidelines, because essentially it all needs to be run through, Parker County, Palo Pinto County, etc. Typically, you'll see 5 to 10 feet minimum away from the house for the septic system. Yep. And then you'll see usually around 100 feet between the septic and the well. And they don't want the well close to any type of sanitary, they don't want it close to the septic. And they don't want the septic close to any type of well or water source. So if there's a river, stream, pond, so it can be situational, but those are just some generic off the Weatherford website.
Yes, and at Possum Kingdom Lake in that area in Palo Pinto County where I live, again, the BRA kind of governs everything. So you got to make sure to run that water well through the BRA, because if it's close to the lake, I know that in most of the developments, including the ones we live at, that you can't dig a well. It's not, unless you're using it for, I guess, just watering your lawn or something, but they won't let you use a well for household purposes because they're so interested in protecting the water at the lake. So again, wells have some, I guess, statewide regulations, but also it varies from county to county, and even in the development which you live might have restrictions on it.
And what about the septic tanks in relation to the lake?
Well, we're out there, just almost everybody's on septic tanks. There are some developments that have a mud system and have that grinder, and then some have their own little sewer system in their development, but most commonly everyone has a septic system. And out there are not really inspections on houses and all. There's not many rules and regulations, no sitting in planning and zoning committee, but what is mandated is that you get this septic system approved by the BRA, whether it's an aerobic system or an anaerobic system. It matters on where your property is and how it'll affect the lake. So it's common out there, and it's new to a lot of people moving from the city to have to deal with a septic system, but the ones that they make today and the way they're engineered, they're very effective and safe.
Great, well thank you. Thank you guys so much. And we will be right back with more of your questions after this break. Hi, I'm Heather Kingston. Showing land on these ranches that we have out here in Parker County is one of my most favorite things to do. Come on, let's go take a ride. When choosing a buyer's agent, you have to have someone who has geographical competence and a vast knowledge of the area that you were choosing to purchase in. As a listing agent, my focus is to net the most for my sellers with the least amount of risk. That's such an important part of my job. And with a background of photography and videography, I bring everything to the table that we need to market your property to the best of our abilities.
Hi, I'm Gary Pierce with Pure Funding. We're proud to serve Texas and, more importantly, Parker County as your go-to residential and farm and ranch mortgage broker.
That's right. I'm Willis Richardson, and with our passion, products, and process, we'll get you to the closing table on time.
Give us a call or come by and see us. We're located right off the historic square in downtown Weatherford.
Or you can visit us first at our website at www.mypurefunding.com.
Whether you're looking for a lakeside or hillside home, or a piece of property that is ready to build on, Possum Kingdom Lake is the place to be. As one of the most beautiful and tranquil areas in North Texas, Possum Kingdom Lake offers far more than just space and scenery. It promises a way of life that many just dream of. I'm Sabrina Sparkman, and I have lived at Possum Kingdom Lake since 2013, so I know how rewarding life here can be. I look forward to seeing you here.
Hi, I'm Kate Hogan with Keller Williams Heritage West. Whether you're looking for residential, land, or luxury properties, I would love to guide you on your journey to finding the ideal property for you. I like to think I make the American dream possible. So call, text, or visit my website and let's start your journey today for finding your American dream property.
Welcome back to your Property Question Time. I'm your host, Heather Kingston, and let's get back to the panel of experts. Joining me today, we have Kate Hogan, Gary Pierce, and Sabrina Sparkman. Thanks, guys. Welcome back. All right, Kate, we're going to jump right into surface rights and mineral rights. Can you explain the effect of surface rights on people who have retained the mineral rights? So let's talk about it both angles. Let's talk about the people that kept their mineral rights, that moved away from the property, and the people that now reside on the property that don't own their mineral rights. What rights do they have regarding their surface rights?
So one of the first things I will start off with, I'm a licensed real estate agent. I am not a landman, I am not an attorney, and so this is something that I always make sure that my clients have a direct connection to someone, the expert that can walk them through this, just because there is so much to it that is out of my level of expertise. I do explain the difference of, simply stated, when you do not own the underground mineral rights, but you do own the surface rights, which is the most common, that when you have the surface rights, essentially you can't mandate what goes on, but you could say if they're going to come on your property and they're going to drill or they're going to put something in place, you can say I'd prefer it not to be here, maybe over there. They're still going to come in and they're still going to do what their intended purpose is, and you as the surface owner, not the mineral right owner, you can just kind of direct them where it goes. They do encourage for there to be some negotiation with all parties so that you do have kind of a say in it, so that you can have some rights to it. But you are protected. The oil and gas company isn't just going to come in and completely destroy your land and all of that. And then you do have a say, if a site is no longer in use, one of the retention ponds, do you want to leave it or do you want them to turn it back to, its original state of just land or whatever. So you do have rights of that because it is on the surface there. So I always direct people if they have questions. I have personal resources for attorneys to talk to in that aspect.
It does freak a lot of people out though, doesn't it? So when you get your survey back, if there are easements to an existing pump jack, you'll be able to see it on there, correct?
If not, you better, because you can obviously see when you go out and you walk property, you're going to see clearings where there's pipelines are marked or there's a caliche drive back to a pad site, all of that. So if it's not on the survey, you better make sure that that's reflected, because where a pipeline is, there's setbacks, how close you can build and all of that. So it's just making sure that you're well educated on that and that your client fully understands what they have rights to and what they don't.
Perfect, thank you. So Gary, we all know about the new show, well, I guess it's not new anymore, with Chip and Joanna, right?
Chip and Joanna.
They've made the whole fix and flip very, very popular.
Absolutely.
If you don't have the capital in your bank account to just, pay cash for a house and then fix it up and flip it,
Right.
Do you have any loan programs that are specifically designed for people that want to do that?
Yeah, absolutely. So, over the last, I would say probably 5 years, really, since kind of HGTV's kind of hit the scene with all these kind of new ways for folks to be entrepreneurs and fix and flippers or whatever. So so we do have quite a few programs actually to our disposal. So you can do, most investment properties require at least 15% down to do the loan. In this case, from a fix and flip perspective, is interesting is we can go as high as or as low as 10% down, and then they will also on the purchase, and then also you can kick in the rehab costs as well. So if you buy a place for $150 and you've got a $50,000 rehab that you want to do, that would then make the loan $200,000, and then you would have disbursements over the time period. Usually it's 12 months, and then once it hits 12 months, you sell it or you go ahead and refinance it into a longer term conventional loan, where then you would have a renter in that place. But those are great loans. They're pretty straightforward, not as, I would say, as invasive as some of your conventional financing with documentation and things like that. They're more kind of commercial focused, where you're looking at, hey, do we have enough cash for down payment and cash to close? And then from there, is there a lot of trade lines on the credit report? But, other than that, it's a pretty easy process and easy loan to get these days.
I'm sorry, go ahead.
What do you call that loan?
Fix and flip. Mm-hmm. Or fix and hold if you're going to keep it for yourself, and then refinance it, and as soon as the rehab's done.
Those are becoming more common?
Absolutely, we're doing them pretty regularly.
Is there a limit to how many a person can do, or is that just all based on their assets and their portfolio?
Typically it's most where you'll have exposure, or the lender has exposure to one client. They usually have, some of our lenders are, $5 million is the kind of the limit as they'll expose to one client. And so, but as far as the fix and flips, they turn them over pretty quickly. So they're not on the books of the lender for more than 12 months typically. So,
all right. Well, that's a great product.
Yeah.
Heather, can I ask a follow-up question and be a host real quick?
Of course.
So let me ask so there's 203K and FHA 203K.
Sure.
So is that, in asking for a personal question, is that more advantageous for someone that doesn't necessarily have the down payment? Like you said, the minimum 10%.
Right.
But essentially is a
Yeah.
rehab.
Yeah, and so to be clear too, the fix and flip is an investor property
Separate.
only, and so the 203K can is going to be more of your primary home.
Makes sense.
So yeah, so it definitely you're going to have the 3.5% because it's an FHA product for down payment, and then they add the rehab cost to that, whatever that might be, and then there's usually one other stipulation is there. Appraised repaired value. So once the house, let's say today it's worth 150 because of the $50,000 worth of issues. So now we want to the lender's going to want to see it have a loan to value of somewhere around 70 to 75%. So 250-ish. I don't know the math offhand right now on that example, but yeah, there is they want to see that repair actually make the value
product.
better. Yeah.
Yeah.
All right, perfect. Okay, Sabrina, let's talk a little bit about surveys. We all need them if there's a lender involved. So there are some new things that we hear on the horizon regarding copywriting those surveys. It's kind of a complicated, issue that we don't really see, but can you talk about that and how that may affect the future of those surveys and on a specific transaction?
Sure. Yeah, surveys, like you said, are necessary, and they're becoming more and more expensive. They've almost doubled in cost the past couple years. So it's nice to be able to have an existing survey to where you just can use it and then have a T47 affidavit saying there's been no improvements or minimal improvements put on there, and that oftentimes will work for a lender or the next person. But we're seeing now and hearing more about survey companies putting copyrights on the surveys. And that is intended to make sure that they can't use it again for the same property and go on and on if there are no improvements. So it's kind of a way to protect them, and how they're going to use it. They may go back and say, yes, I'll use the same survey and have a monetary value to use the same one, or the lender may not want to use that one at all if there is a copyright and require it again. But the surveys are something that we use all the time, and T47s showing no changes are common, but that may become less common in the future with the copywriting.
Have either of you seen a survey copyrighted yet?
Not yet.
Yeah, I haven't, and that's kind of an interesting, because obviously, refinances, we're not just doing purchases, right? So in the next, hopefully rates will start continue to come down. So that could make the refinance costs get really out of whack. If you add another $1,000 in fees to a refinance, so that could get more expensive. But yeah, we like the affidavit.
Yeah, we hope we don't see too much of that.
Yeah, it's a good thing for us.
T47s.
So bottom line is check the survey for a copyright symbol and then call that surveyor and see how it's going to affect the transaction.
Absolutely.
Right.
Yeah.
Okay. All right, let's talk real quick about deals that fall apart.
What?
So this is for the whole group. All right. So real quickly,
Never had one of
we're
those.
running a little short on time, but real quickly, let's talk about some sort of deal that you've seen recently that fell apart. What was the reasoning? What's kind of common? Why would this happen?
Well, I saw one recently on some land that I sold in a development that there's a paragraph in the contract that there are objections up to, you put 3 or 5 or 7 days, and usually it relates to the title issues, some title deed issues or survey issues. And the survey was done, but when it was done, it was kind of surprising to see where the stakes were on relation to that piece of property, because my buyers decided that they couldn't build the house they wanted to build there. It just didn't fit. They came out with their builder and said, it's just not going to fit on here, and we didn't know that until we saw those survey stakes. And so they backed out of the deal and got their earnest money back because that survey, they had an objection to it that couldn't be redeemed, or it couldn't be fixed.
I mean, personally, I haven't had any as far as being, representing a purchaser. However, on one of my listings, it was just, again, it was buyer remorse. They got into it and realized that their payment was more than they wanted to spend, and I think that's where it matters, being very clear and upfront with the, the relationship that you have with your lending partners, because you can go over specifically what monthly payments are and costs and all of that. So I was very surprised that that was a surprise to them. Yeah. And so we might see more of that, just depending on, how versed they are as far as, their approval. So
we are seeing things on the appraisal too. If the appraisal comes under and then you can't remedy that. You know, you either, the seller and the buyer negotiate, the seller pays the difference, the buyer pays the difference, or if none of those work, then it can't be remedied, and the deal will fall through, assuming that there's no addendum for termination of appraisal in place.
Sadly, that is all the time we have for today. Thanks so much for joining us. We need more of your questions, so please be sure to send those in to us via our website at paxtelevision.com, PAXtelevision.com, or you can email them directly to us at pqt@paxtelevision.com. And my thanks goes out to the panel of experts that joined us today. Today we have Kate Hogan with Keller Williams Heritage West, Gary Pierce, lender extraordinaire from Pure Funding.
Thank you.
And we have Sabrina Sparkman with Coldwell Banker Realty. From me, Heather Kingston, and the entire group at PAX Television, have a great week, and we'll see you again next time.